Hi everybody, let's talk about real estate. And right now, the number one thing that people are Googling is the housing market gonna crash? Google Trends data says more people are nervous about their market time and they are scouring the internet for housing crash information to find their answers. So the answer is the field is still changing in real estate, but the game is still on, folks. So I hope to give you the information so you can make your own decisions about this market. This market actually reminds me of being on a big highway. Let's say you're on I-40 going to the beach and you're speeding. I know you probably don't do that, but somebody in your family might. So they're speeding and going over the speed limit, and then all of a sudden you see something that might be a patrolman up ahead, and so you slow down to about 60 miles an hour. Well, you were going 85, so when you go down to 60, it feels like you're going 30. And that is really what our market is about doing right now. It's deceleration. It's not depreciation or the crazy appreciation we've seen in the last 12, 18 months. But there's three terms I want you to be very familiar with, and one of them is appreciation, depreciation, and deceleration, and that's what we're seeing right now. So there's no really need for you to worry if you own Raleigh real estate, Cary real estate, Holly Springs real estate, or anywhere else in this mega triangle market. Your real estate investment is not depreciating. Your home is still appreciating, probably at a lower level, thank goodness, than in the last 24 months. We've seen appreciation unbelievably up to 42%, and that appreciation is absolutely unsustainable. And thankfully so, because if that went on, nobody'd be able to buy a house. However, Triangle Real Estate is a really popular city, and all the popular cities in the U.S. right now, there's still demand for homes is continuing to rise. However, the rise in the search term suggests that homeowners are increasingly nervous about whether they should sell their home. So people want to predict the future, and that is a difficult task. Plus, my crystal ball is in the shop right now. So what's next? Let's talk about the options. Here are the facts for you to make your own mind about answering the question for yourself. A crash and a huge bubble did hit the triangle in 2008, as well as throughout the United States. Housing values at that point in time went down by about 20%. So here's what's different today from the 2008 crash. And number one thing that's different is mortgages are much harder to obtain than they were in 2006, 2007. So the saying in 2006 and 7 and 8 was it's harder not to get a loan than to get a loan. There is now increased regulation, tighter lending procedures, i.e. people that can actually afford to get a loan. They've raised the standards to highly qualified buyers. And today's saying is more likely only the people that don't need a loan can easily get a loan. So it's quite the opposite. But the second reason I don't think a serious housing crash is in your future is just the inventory. It's really hard to have a crash when you have a shortage of homes. And inventory levels we receive from three different places, and I want to talk about each one of those. We receive new inventory from new construction, from resale homes, and from distressed properties. So let's break these down and talk about each one individually. New homes, for example, have been below the rate to keep up with demand for 14 years straight. So there's not enough new homes out there to serve the millennial generation and to keep up with those first-time home buyers and even second-time home buyers. And second, resale homes are listing at a much lower level. Nationally, we only have about a 3-month supply, and a 6-month supply indicates what they call a balanced market. So in Raleigh and in Cary real estate, we have only about a 2-month supply of homes to sell. So breaking news, you won't hear it in the headlines. We are still firmly planted in a homeowners/sellers housing market. And we're still receiving offers on our listings, many of our listings, over list price. The second group of homes that you need to be interested in is distressed properties from 2020 during COVID. And we can show you a chart that shows you that most of these homeowners that got into trouble during COVID have now worked out ways to repay their lenders. In the entire United States, there's less than 400,000 homes that are considered distressed properties. And if all 400,000 homes came on the market, demand would easily absorb those homes with the current buyers that are hungry for homes to see. So with all the negative headlines, it may seem hard to believe that housing still holds its value, but it's true. Even rising interest rates have not changed the fact that housing continues to appreciate, although at a lower level. 10% by some accounts is the average of experts. But as the Fed works to stem inflation by raising those interest rates, we know that past recessions, with the exception of 2008, history shows us that mortgage rates fall during a recession. That's probably the reason they are now predicting that by next year we'll see 4.5% interest rates again. So we need to remember that the media is going to train your brain to think and believe the worst in any situation. In fact, now is still the time to sell for a profit. When you live in an area such as Raleigh and Cary and surrounding cities where the demand is high, there are people relocating to this area in search of jobs and better priced living. And the Triangle has always ranked high on charts of great places to live. So have no fear about your real estate investment. The better question to ask yourself is, what is your motivation to sell? Are you wanting to be near family or friends? Do you feel the need to downsize and free up space in your life? Are you ready to enjoy a different part of the world? Do you need access to the equity in your home? At the end of the day, there really is no magic ball, but we can take our best educated guess at the future and advise with experience what would be the best option for you. And I'll end up that the thing we know for sure is that inflation is the enemy of long-term interest rates. But again, when inflation is stemmed, the Fed uses lower interest rates to stimulate the economy. So date the rate and marry the house you want to buy is a smart move in today's market. Now, as I've mentioned, several of the agencies that are out there are predicting a 4.5 interest rate in 2023. So you buy a home today at today's price level makes serious sense for buyers that want to make a smart move in this market. So get in touch with us and let us know how we can help you make a great move in our current market. I'm going to leave you with a quote. I think it was by Warren Buffett. As a matter of fact, I know it was. It said, "Be fearful when others are greedy and greedy when others are fearful." And what that means to me is when you see the market pulling in and changing and shifting a little bit, playing a little bit of defense on the market. In other words, people are not ready to sell right now. People are not ready to buy. That's the time when you switch to a very forward motion, and you switch from a defensive position to an offensive position. And if you do that, you're going to make a great investment in current market and in real estate here in the Triangle. Thanks so much. Bye-bye.